Hello there. This is James, and you're watching OneRoyal, and it's live. In today's program, I want to talk about how Trump 2.0 has basically spooked the markets with his obsession over tariffs. Tariffs? Tariffs. Sorry, easy for me to say. And how basically this is a beginning of a full scale global trade war and the implications that has on the market. But before we get into all of that, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out the way, let's get started. So, yes, we are indeed at the beginning of a full-blown trade war, because as of today, there is 25% tariffs on Canada and Mexico. Also happening today, there is 20% tariffs on China. Okay. Then coming up soon as well, so we're part of Trump 2.0's tariff plan. Then coming on the 12th of March, 25% tariffs on steel and aluminium. And then on April the 2nd, we'll start seeing reciprocal tariffs from the US. Basically going to be looking at the EU. But nobody else is really taking it sitting down, because China has struck back with tariffs on their own, and they're going to be doing tariffs of 15% on US chickens, wheat, corn, and cotton. As well as that, they're going to be doing 10% tariffs on US soybeans, pork, beef, fruits, vegetables, and dairy. Not to be outdone, of course, Canada has also done their own version of tariffs by imposing tariffs on 107 billion on US products as well. And Mexico's president has announced they will be putting tariffs on their own against the United States coming this Sunday. Now, here's the thing. We've had a bit of tariffs before, don't forget. We saw tariffs in Trump 1.0. However, it obviously appears to be a lot more aggressive this time around. And realistically speaking, this couldn't happen at potentially the worst time. Okay, the worst time, because the US economy, this shows indications of growth slowing, labor market slowing down, consumer spending is falling, and inflation is creeping up. Target released their earnings, a massive supermarket chain, obviously, and they had to say this: in light of the ongoing consumer uncertainty and a small decline in February net sales, combined with tariff uncertainty, the company expects to see meaningful year-over-year profit pressure. Basically saying, again, because of tariffs, okay, it's going to cause a big problem on already an economy which is slowing down. Don't forget, we had consumer confidence a couple of weeks ago, came in very, very low. So this is indeed a worrying time. I missed the worst time to do it. Now, it is expected that, or has been said by the Bank of Canada, okay, or by other experts in the financial world, they've said that tariffs of Canada and Mexico alone, just tariffs on Canada and Mexico, we're not talking about China, we're not talking about the EU, tariff on Canada and Mexico alone is projected to shrink the US GDP by 0.2%. In fact, Atlanta's Fed GDP Now model projects GDP growth in Q1 to be negative 2.8%. Bank of Canada, okay, has warned that a prolonged tariff war will potentially chop Canadian output by nearly 3% over the next 2 years. Now, of course, on the back of this happening today, obviously we've had the Canadian dollar and the Mexican peso slump to a 1 month low. And indeed, the market is under a lot of pressure. Let's have a quick look at the market now as we're talking about it. Let's start off, of course, with the S&P 500, which has not been having good trading sessions over the last couple of trading days. Okay, as we can see, it's now trading at 5,752 points. Okay, now if we have a look on a daily, okay, and then we can see how many days, like I say, it's had a very bad trading week. We're now looking at what, 1, 2, 3, 4, 5, 6, okay, 6, 7, 8 days of losses. Not obviously consistent because they had a little bit of recovery, or I was like on the Friday, but 8 days of losses. Okay, currently for the month, now for the week, even the S&P is down negative 3.73%. Now, the other thing to look at, of course, is have a look at the VIX. Don't forget the VIX is the fear indicator. So when people are worried about the market, what do? They buy put options against the S&P 500. And if there's more people buying put options against the S&P 500, then the VIX starts to move up. And look, today, he even opened with a gap. So not good at all. Let's have a quick look at Target after their worrying earnings, and they're worrying the market. Look at that massive drop today. Actually down at the moment, negative 5.07%. Okay, the market's only been open for say 45 minutes, so negative. Actually negative 4.96%. So that's what's really worrying. As well as that, on plus side, if you're an euro trader or a euro bull, should I say, or a sterling bull, you are seeing a little bit of weaker dollar, apart from obviously against the Canadian dollar and the peso. But, we are seeing a slightly weaker US dollar as well against the likes of the sterling and like the euro. Like I say, if you're a euro bull or sterling bull, okay, you have seen a bit of strength there. As well as that, we still a lot of risk off. Bitcoin is still, having a slump at the moment. It's not doing so well at all at the moment. The excitement of Trump coming in, changing regulation, pushing the Bitcoin to 100,000 is now obviously worn off. Let's have a quick look at both Bitcoin and the euro and the sterling as we speak, even. So first of all, the euro, okay, like I say, we're actually trading above 1.05, which, is a good level. And this is on a daily, of course. So, and the sterling is trading around 127. And we haven't really been trading around that level because we spiked up a few trading sessions, but really since December, December the 24th. So obviously the sterling is doing quite well there. Whoops, let's put the proper screen on. That's better so you can see it better. And let's have a quick look at Bitcoin. Like I say, Bitcoin is not having a good time of it. Okay, currently trading at $82,296. I mean, if we go all the way back here to when it was the 6th, here we go, around the day after the 6th, okay, the 5th, when he won the election, and then the excitement of Bitcoin skyrocketing, that is beginning to wear off as we speak. Now, I've had enough of talking about tariffs for the time being, because I've been talking about them a lot. So let's look about some other things happening this week, which is worth keeping an eye on. Come Wednesday, we have US ISM non-manufacturing PMI. And then, of course, Friday, which I think potentially could be a really big one. I mean, obviously, the NFP is often a big event, maybe not so much like it has been in the past, but I think this time around, it might prove to be really, really interesting. With that in mind, I will be doing a watch along for this event on Friday, so keep an eye out for that. So anyway, NFP expectation is to come in 158,000. Previous number was 143,000. Now, the reason why I'm actually quite interested in this, don't forget we had initial claims last week, which was around a 3-month high. And there's a little bit of signs that the labor market, like I've said earlier on, is beginning to slow. So this, with everything else going on and this, we could expect potentially a lot of volatility in the market. So keep an eye out for that. And by all means, join me on Friday. I'll be going online at 1:15 p.m. GMT. So come along and check it out. Anyway, don't forget, this is indeed a live show. So you can feel free to ask me questions anytime at all. If you're watching me on YouTube or watching me on the blog. As well as that, if you're not watching me live and you have a question, by all means, put it in the comment section below. I will see it and I will answer it next time I will go live. Anywho, like I said, if you watch me on YouTube, by all means, subscribe if you like. Hit the notification button so you know next time I'm going live. And if you enjoy this type of content, by all means, give me one of these. It's nice to know that you like what I do. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.